Hi, in this video, we will learn presentation of share capital in company's balance sheet. Now, in this chapter of issue of shares, we may be asked to depict the share capital amount in the balance sheet and also prepare the notes to accounts for the share capital. So, in this video, we will understand how to depict share capital in company's balance sheet and also the format for preparing notes to accounts for the share capital. Now, if we see here, this is an extract of balance sheet of A Limited. You need to write on top balance sheet as at 31st March, whichever year it is. It's divided into two parts vertically. The first part is referred to as the equity and liabilities, and the second part is assets. The format is like this. We need to write 1 shareholders funds and below that A share capital. Against note number 1, which we will depict later, we'll write the amount of the paid up share capital. And B reserves and surplus. Against 2, we will write the amount of the security premium reserve, capital reserve, etc. Now, in case the share has been issued for consideration other than cash, for example, for the purchase of land, building, etc., we will write that amount against non-current assets subdivision, fixed assets, and within that tangible assets. So the amount of the tangible asset, which could be land, building, etc., will be written against the note number 3. The amount will be written in the amount column. And where the share has been issued for cash, we will write it against cash and cash equivalents under current assets. And we will see this in note number 4. And the amount will be written in the amount column. Now, this is the format of the balance sheet. We will see how we will arrive at the amounts against these items: share capital, reserves and surplus, tangible assets, cash and cash equivalents, etc., via the notes to accounts. So when we begin with the notes to accounts, as we saw earlier, the first note is against share capital. We need to begin with the authorized capital. We need to state the amount of authorized capital separately for preference shares and separately for equity shares. Then we'll go on to the issued capital and again state the amount of the issued capital separately for preference shares as well as equity shares. And then we will go on to the subscribed capital. The subscribed capital is divided into two. The first part is subscribed and fully paid up. The second part is subscribed but not fully paid up. And finally, we will add forfeited shares account. We will see the meaning of this later when we do the topic of forfeiture of shares. And this is the amount to be shown under share capital in the balance sheet. So we begin with the note 1, share capital. Authorized capital the number of preference shares at whatever face value. We write the amount in the inner column. The number of equity shares of the face value, we write it in the inner column again. We need to add the two and write it in the outer column. We need to do a double underline against this amount because this is for information purposes. It is not the amount of the liability to be shown in the balance sheet. Similarly, for issued capital, the number of shares, preference shares of the whatever face value, the amount in the inner column. The same for the equity shares, the amount in the inner column. We'll add these two amounts up and put it in the outer column. Again, this has to be double underlined because again, this is not the liability to be shown in the balance sheet. And then we go on to the subscribed capital. Subscribed and fully paid up and subscribed but not fully paid up are the two divisions under the subscribed capital. We will see this a bit later. We need to write the number of preference shares of the nominal value and write it in the inner column. And the same goes for the equity shares. Now, below this, we need to write the number of shares specified in which have been issued for consideration other than cash. Not for cash, but for some other asset, let's say land, building, etc. So this has to be mentioned via a note. The total needs to be taken to the outer column, the subscribed and fully paid up, the equity shares as well as the preference shares total. Subscribed but not fully paid up, we will write the amount and subtract the calls and arrears to be taken to the outer column. The forfeited shares account represents the amount received against the shares which have been forfeited but not yet reissued. We will learn that in detail later. And finally, the amount, that is the subscribed and fully paid up plus the subscribed but not fully paid up plus the forfeited shares amount, is the final amount which needs to be shown under share capital in balance sheet. Under reserves and surplus in the note number 2, we will write securities premium reserve as well as capital reserve. The gain on reissue of forfeited shares will be transferred to an account which is called capital reserve, which will appear under reserves and surplus. And where the shares have been issued for consideration other than cash, for example for purchase of building machinery, etc., such amount of building machinery purchased will be shown under note number 3 in tangible assets and the total taken to the outer column. Any cash received from the issue of shares will be shown against cash at bank under the head cash and cash equivalents. Now we learnt that the subscribed capital is divided into subscribed and fully paid up as well as subscribed but not fully paid up. Now when are shares shown under the head subscribed and fully paid up? The shares are classified as subscribed and fully paid up when the following two conditions are satisfied. The first condition is the company has called up the entire nominal or face value of the share. And also the second condition is satisfied. The company has received the full amount that it is called up. That is, a full nominal or face value of the share has been received by the company. Now when these two conditions are satisfied, then we will write the amount against subscribed and fully paid up. That is, the company should have called up the entire face value and received whatever has been called up. On the other hand, shares will be classified as subscribed but not fully paid up when it falls under either of these three conditions. The first condition is the company has not called up the entire nominal value of the share. So if the company has not called up the entire nominal value of the share will be classified under subscribed but not fully paid up. The second situation, the company has called up the entire nominal value of the share, but it has not received the amount which has been called up. A few shareholders, a specific shareholder or a few shareholders has not paid the amount which is called up by the company, though the company has called up the entire nominal of face value of the share. The third situation is the company has not called up the entire nominal value or face value of the share, and from whatever has been called up also, the company has not received the amount which is called up on the share. So in the first situation, the company has not called up the entire nominal value of the share. The second situation, there is calls in arrears. So in respect of those shares, we will classify it under subscribed but not fully paid up. And the third situation is the company has not called up the entire face value, as well as there is calls in arrears. So we just understood how to depict notes to accounts for share capital and how to disclose the share capital in the balance sheet of the company. In the upcoming video, we will do a few example sums to demonstrate this concept